Thanks for clicking. We had an interesting week in China's real estate and growing economic crisis this week, as newly released data showed the extent to which China's real estate market is falling, as developers' earnings fell across the board. And it's not looking like it's going to be getting better anytime soon, as we also received news that more than 70 cities across China had locked down, as the country attempts to prevent any major outbreaks that might make President Xi look bad ahead of the much-anticipated 20th Party Congress in October.
Don't make a out of me!
But Xi definitely won't be heading into the Congress with as strong of an economy as he would have liked, as we also received numerous reports this week of a weakening Chinese economy. So what I want to do today is skip over Evergrande and take a look at the real estate data that was released this week. Then I want to look at the lockdowns leading up to the 20th Party Congress, and then we'll discuss the economic implications of these continual lockdowns. China's moves over the next few weeks vis-a-vis its real estate crisis and its economy will all be in preparation for the 20th Party Congress being held in October. The Congress is all but guaranteed to return President Xi to a third term in office, and we'll obviously continue to have updates out on these moves going forward every Friday on this channel. If you want to get those updates, make sure you click like and subscribe, but for now, let's get into this real estate data. As mentioned, data came out this week showing that China's real estate developers continued to struggle throughout the first half of this year, with their profits dropping to $2.5 billion, an 87% drop since the same period in 2021. The decline represented a further drop in China's property market, which at its peak in 2020 saw real estate developers profiting $30.9 billion. $2.5 billion versus nearly $31 billion, that's a big drop in just under 2 years. And to give you an idea of the magnitude of this drop, this was the worst first half year on record for China's real estate developers since 2008, at the height of the global financial crisis. The real estate decline is being blamed largely on the clampdown on debt, the clampdown on leverage vis-a-vis China's 3 red lines policy that we've talked about so many times on this channel, but it's also being blamed on China's weakening economy resulting from China's zero COVID policies, which were also intensified this week. Well, we've talked before on this channel about previous lockdowns in Shanghai and how they nearly crippled the Chinese economy. Last week, China's city of Chengdu entered into another lockdown, the largest since Shanghai opened up after its lockdowns in June of this year.
But it is the largest urban area since that lockdown was alleviated in Shanghai back on June 1st. So 21 million people obviously going through trials and tribulations as drones are going through the streets urging people to stay indoors, do not go out. It's a bit dystopian, some might say.
Well, the lockdown is definitely in line with President Xi's zero COVID policies and will probably have a major impact on the economy going forward.
Not a problem.
The Communist Party wants to ensure that no major outbreaks occur in the lead up to the 20th Party Congress, where President Xi is widely expected to be reappointed for a third term as president. And it's not just the 21 people in Chengdu. By some estimates, it's over 74 cities and over 300 million people are under some sort of lockdown in the lead up to this 20th Party Congress, with experts saying that we should expect more to come over the next few weeks. And the cost of these lockdowns are continuing to add up. We've already talked about at great length the effects these lockdowns have had on the real estate market, but it also came out this week that the lockdowns are having a negative impact on nearly 12% of China's overall GDP. As such, Nomura downgraded its forecast for China's GDP growth to 2.7%, down from its 2.8% forecast in August. For its part, Goldman Sachs downgraded its GDP forecast for China to 3% just 3 weeks ago, and that was down from 3.3% prior, which is a major downgrade from China's own 5.5% GDP forecast that they had at the beginning of the year. So while the real estate crisis is continuing to spread, continuing to worsen, and we're seeing the impacts of that in the data, we already know the impact on the economy of these zero COVID policies, but President Xi is continuing with these policies, continuing to lock down millions of people ahead of this 20th Party Congress, as if there was a large outbreak prior to this much anticipated meeting. that would definitely not look good for President Xi. So, all in all, not a great week for China's real estate or its economy, with an 87% drop in profits. That's huge, with millions upon millions of people heading back into lockdown ahead of this Congress, and with us starting to already see the impacts on the economy of these lockdowns, with many experts predicting more to come. Whether or not we will see more lockdowns or more negative economic data in the lead up to this Congress remains to be seen, but we'll obviously continue to follow it every Friday on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.